Welcome, guys. Today we're hanging out with some amazing people. We got the coach and we got Max Convexity. And today, guys, we're on with smart money and let's talk about some amazing topics. But introduce yourself to the coach.
Hey everybody, I'm glad to be back on here. Some people know me as boring old coach, but I'm going to try to be more entertaining tonight for sure. That is the minority that thinks that, by the way. Yeah.
And Max, he gives you a little introduction to yourself, sir.
Hey guys, my name's Max. I'm happy to be here tonight. Sorry my camera's not working. That's a long story, but anyway, I'm glad to be here.
Nice. So today, guys, we got three fantastic topics. And if you want to join the stream, guys, the stream link is in the first pinned comment. So if you want to join, you don't have to show your face. You just talk. And
in case anyone wonders if I do really know about money, it's all in the glasses, remember?
What else? We got the link is in the first pin one. So here's our first topic, guys. We're talking about some real big things that are happening on the internet and with the UK. So let's go into the first clip.
And we do have dedicated police officers who are scouring social media. Their job is to look for this material and then follow up with identification arrests and so forth.
This is in relation to some comments that you've made on a Facebook page.
You were the witnesses saying, obviously, people, while they're over here, etc., we let them into our country, etc.
A woman has been arrested by Cheshire Police in relation to inaccurate information on social media.
If someone has been caused, obviously, anxiety based upon your social media post. That's why you've been arrested.
In Russia last year, 400 people were arrested for things that they said on social media. How many people do you think were arrested in Britain for things they said on social media last year? Take a guess.
I have no idea.
3,300.
Really? Arrested for what they'd said on social media?
Yeah.
My goodness.
Craziness, guys. So
That's
we're going to
insane.
talk about it. Like, what do you guys thoughts about it?
I mean, I'm just glad the censorship's finally basically come to an end here, but it's just crazy that it's going on like that in other countries.
Absolutely. To me, I just find it kind of interesting that they're going out their way to arrest people for what they say. And I mean, freedom of speech is a very rare thing to find across any country. A lot of countries do. I mean, they'll, as it seems, is like if they don't agree with your political post, I mean, and typically it seems like you can be offended by anything. So if someone says your dog is ugly, you might get arrested. Like,
I know a lot of people don't like Elon Musk, but I will say when he bought Twitter, that was a big part of the turning of the tide here. Because remember how it was going before? Like they were censoring a lot of people for stuff.
Yeah, the whole censoring about COVID, the epidemic we had. That was sorry about that. But even during that time frame, to me, it was really bad because we were getting a lot of things flagged. You couldn't post things on social media or about even on here on YouTube. But now things seem to cool down, and like even with our next clip about this, I think it's almost the same thing. Yeah. Oh, here's the one with Tucker Carlson about it. Oh, you guys don't see it. My bad.
If you're trying to figure out what the U.S. will look like into the future, worst case is kind of what's happening in the U.K. right now. People getting arrested over Facebook posts.
And this is why you really got to be smart in the way that you fight these things. When there was one of Donald Trump's trials, there was a big group of Trump supporters who were outside protesting. I tweeted, hey, dear Trump supporters, if you happen to see a barrel-chested man outside screaming, storm the courthouse, don't storm the courthouse.
Can we just establish that anybody who screamed, let's storm the Capitol, I can think of two people who did, who was not arrested.
Was defended by Democrats in the Congress.
Yeah, and he wasn't alone. There's another prominent person who did that as well, as I know you know. Didn't get arrested, didn't go to jail. I mean.
And that's another thing, guys. We have this freedom of speech is really helpful. I wish other countries would have it, but I mean, I just see that the UK, not all the countries in the UK, but just what's happening now is in a downward spiral. Max, you there?
Yeah, I'm here.
Right. I mean, you're the older.
Yeah, you're right. I'm a little bit older, I guess, but about twice as old. Heck yeah, no, it's definitely, it's scary where it's going. And even in America, yeah, you can, I mean, on Twitter, you can say retard now. I mean, it's fine to say retard and you can have vaccine hesitancy, but you can't criticize Elon. I mean, you can't hurt. It's just he did the same thing the other regime did. Just, I mean, you know what I'm saying? He's banned all the liberals. My favorite lefty, and I'm not really a lefty. I'm kind of an independent. I do like this one guy named Matt Taibbi, and Elon put him in charge of the Twitter files. He did a great job. They got him some kind of thing, and he's banned from Twitter. You know, Alex Jones was banned from Twitter.
Mhm.
So what I'm saying is, it's still a bad system. It should be free speech absolutism, which is what Elon said he was. Should be free speech absolutism. You know.
Alex Jones is there in Austin, I think.
Yeah.
Yeah.
Alex Jones was banned for a year. To be fair, Elon finally let him back on after about a year. But he still has some lefties banned. All I'm saying is before the righties were banned. That's true, and that's no good. The vaccine hesitancy was banned, and you couldn't, and you had to be woke. Nowadays, you don't have to be woke, and that's good. I'm glad about that. I'm kind of joking, but it is ironic now. There are seriously some lefties that are banned off Twitter. So, but anyway, we're still way better than Russia or England.
Yeah. Not to go off on a tangent here, but I've always said like these big movie production companies, like say Disney or like Marvel, which was owned by Disney. Like when you have all these intellectual properties, they're like a gold mine, and all you have to do is just produce according to the story canon. But then they go woke, and it's like, why? It makes no sense.
Oh, actually, I'm happy you brought that up. The last Snow White video they brought up was basically bombed. I think it was like a.
Oh, you went to see that, right?
I did.
Oh my God! No.
Go woke, go broke.
Yeah.
Snow White.
Yeah, but the good thing is when it comes to consumerism, people vote with their wallets, and stuff like that goes through trends. It was a trend that things were real woke for a while. Now we're on the trend where things are real super unwoke.
Yeah, 1.3.
It just swings back and forth. I'm not, yeah, it's definitely more fun now and more fair. I'm not saying it. I'm just saying it's definitely more fun and more fair. I like being able to say retard again.
Here's a more detailed clip of what's happening in for the the UK.
6 police officers came to my house and arrested me. Why? Because I've been talking about my daughter's school on a WhatsApp group. It was the morning of Wednesday, the 29th of January, about 11:45. I was on a Zoom call for a work project, when on my Zoom screen, in the little window where I saw my own face, I realized that 2 police officers were standing behind me. Another 2 police officers were arresting my partner, Rosalind, in front of Francesca, our 3-year-old daughter. They bundled us into the police cars and took us off to custody at Stevenage Police Station, where we remained for the next 12 hours. He arrested me on suspicion of harassment and malicious communications, and it was to do with a dispute with our daughter's primary school, which began with posts on a WhatsApp group. On the 23rd of November, 2023, the head teacher of my daughter's primary school announced he would retire. But what seemed strange to me was the Board of Governors decided immediately to appoint the deputy head as acting head 10 months later without even advertising the job. So I made some inquiries. I contacted the chair of governors in private and in good faith and asked her to explain what a rationale was and what was going to happen. Her response, in my opinion, was rather evasive. So I asked again, and I wrote to all the governors asking them to explain what was happening and why they decided to do that. I posted that letter in a WhatsApp group. It's a private parents WhatsApp group. On that WhatsApp group, like most parents, we chunted about a few things. One thing we talked about on that group was a letter from the school commanding all parents not.
It's actually interesting right there. So far, it seems like it's very normal activity. We have parents talking to each other, talk about what's happening in their school. I mean, this seems like a normal practice in the States. Or other parents are just getting together, right? Let's see.
Yeah.
Or carers, okay, kind of weird. It is with regret that I have to write this letter. Whilst the vast majority of parents support the work of the school and behave appropriately, there are a very small minority of who choose to be disharmony. You mean they don't agree with you, basically. They don't. It has come to my attention that social media, including WhatsApp groups and Facebook, has been used to make inflammatory and defamatory comments about our senior leaders in the school. Yeah, okay. This is something like we had in the military. If someone doesn't agree with you, you basically shun them out. But we got a comment from Make Miranda a Gamer again.
Crazy. Oh, my favorite.
We didn't crazy. We didn't even censor like this within the empire. No, I mean censorship is okay. I think like if we're talking about OF stuff or adult stuff, I can see censorship. It makes sense. You got to be an adult.
Oh yeah, we can't say the word, but we the letters. Yeah.
That to me makes sense. Kids stuff, obviously, we're not going to go down that route. But this stuff right here, like to me, it seems like a bunch of parents are just trying to get together to complain about their leaders, and if the leaders don't like it, that they're complaining about it, it seems like they're just shutting them down. We don't want to play the whole thing with a little bit more.
Talk about the school on Facebook or social media or WhatsApp groups. We thought that was a bit off. My partner Rosalind made a handful of vaguely spicy comments. She referred to one school leader as a control freak.
Okay, yes, blank manipulates people into thinking she's their buddy, but then they spy for her. She's a control freak. I mean, this could be a factual statement. This doesn't seem like it's bad. I mean, hypothetically, if this is an actual thing happening, this would be a factual statement rather than them talking down about somebody.
I mean, it's like it's an opinion. It's not like defamation of character or whatever.
Governors didn't know much about anything. Out of the blue, on the 12th of July last year, the chair of governors wrote to Rosalind and me. She accused us of posting disparaging and inflammatory comments on WhatsApp and Facebook. And she warned us that if we didn't stop, she would ban us from our daughter's school. So
ban them from
their
school.
Oh my gosh. I bet
surprise, motherfucker.
When they saw that, they were like, oh my gosh.
Oh no. Oh no.
Let's see. A very leadership about school, WhatsApp, comments about process. This to me, I'm happy we don't have this in the States. I feel sorry for our UK allies.
Counterparts, yeah.
Whew, so much, but you guys have anything to say about that?
Poor England, they've really come a long way.
Ugh. I know we want to talk about their immigration issues too, but this is another compounding problem. But yeah, guys, if you guys want to join the stream, let us know. If you want to put your input in, that's cool. We're going to move on to our second topic. And the second topic is the Department of Government Efficiency. Now, this to me is amazing. I absolutely love this, that we're getting some audits. I mean, look, this thing going up. Departments of Labor. Where's the back
Department of Education is gone, right?
Mostly gone. I think it's like a bare bone now. But like this right here, I like how we showed the first savings. So the Department of the Interior, Family Endeavors, Office of, so the description and the date it comes out to about $2 billion, almost $3 billion. So $3 billion saved. That's crazy.
That's good. It's just such chump change compared to what the government spends.
Chump change, yes, sir. Chump change.
Yeah, yeah.
And there was actually a story. There was actually a story that came out today. I don't know if you saw it, but Elon Musk said the real number is going to be more like 150 million. And it's because it's not. I mean, because they're going to try to make it more, but it's because people have been getting in their way a bunch and stuff. But yeah, the actual number for the first year savings, it's a good start though. But that $5,000 savings, $5,000 a person savings, I don't think it's going to happen. The 150 million is literally chump change. Now, if it was 2 billion, I think the government's, I think we spend 4 billion or 8 billion or something. 2 billion would not be chump change. That would not, that's what it is. We spend like 8 or 10 and they wanted, and that was their goal to do 2, but they just, and I'm not trying to, whatever. I just saw this today and they were in the Oval Office and Elon said it's going to be 150 million first year savings. So anyway, be that as it may.
Do you think, in theory, like this should put deflationary pressure on the economy, like by cutting spending. This should help with that, like as far as
government spending is inflationary, but also good. They use the government spending can kind of help spur the economy because it's kind of artificial. So, but yes, but in theory, yes, of course, I agree with what you said.
Yeah,
and also it's biased spending too, because if the government agency spends, say, $1 million on a property or whatever, they can use that money to benefit XYZ friend or family member, and them inducing like a boom in that economy or that person. So to me, it's like this right here. I'm looking at the leases. Do you think that these leases could be possibly biased leases, like them intentionally renting towards like XYZ?
Yeah.
Like, look at the savings on here: $18 million saved on leasing, $11 million saved on leasing. This is crazy amount of money spent.
Yeah.
Wow. Boise, like I'm just going through the list, guys. And once again, if you guys have any questions or comments, you guys can join. And also, thank you guys.
Thank you very much. Thank you.
Welcome to new people.
Welcome.
And if you haven't done this yet, guys, subscribe to our channels. We'll have them posted in the description, or you can
subscribe now.
Let's see. But we have a lot of things like this. This to me, like the wall of receipts. Like, I wish the news would actually cover this stuff a lot more instead of just talking like, "Hey, Elon X, Trump bad. No, let's not help out the economy or the country." To me, we needed an audit. Despite Doge, we needed an audit full scale to see what is happening with all the money.
I might have said this on the last stream, I can't remember, but like he did an interview on Fox and it was great because he said like everybody's critical, but they don't name any like what specific part of what we're cutting do you disagree with? And no one actually does name that.
Let's see where they go. Can you go to high to low? Total value.
Yeah, you should be able to sort it. Yeah. US aid.
Oh my. Let's see, go to the front page, total value. Savings. Oh, those are some big ones. Department of Treasury. Centennial Technologies Enterprise, 1.9 billion. What the heck is this? Oh, wow. Like, since these numbers are so big, I wonder how easy it is to be found, like on their balance sheets. Like, think about finding, like, looking at a balance sheet that has 1.9 billion on there. Like, what would you do? Like what? Holy crap. Our next thing, guys, is the Doge debt, not Doge, the US debt clock. And we talked about this a little bit in the last stream, but we're going to focus more on the Doge one and seeing how fast it pretty much is racking up. We're at.
So it's saying here, yeah, it's almost 3,000.
Wow.
Per taxpayer.
Per taxpayer. Woo! That's better than what we're doing. I mean, this is amazing. $330 billion.
So, but crazy. What's that? Yeah, I see that 2,900 per taxpayer. So Doge, but what's that figure in the savings is? Is that because the savings, a lot of that stuff, that 8 billion that they were saying turned out not to be true. A lot of that stuff was leases and stuff that had already been canceled. And, you know, a lot of that stuff wasn't true. When it comes down to what they really canceled, it was 150 million. So you take 150 million and divide it by 300 million people, right? And it's like, maybe that's 2,000 a person. I could see that. I'll do the math real quick. I'll do the math. You guys keep talking. Sorry.
That's okay. So it would be interesting to see if the Doge clock amount of savings, let's say gross savings, ends up being more than like a defense budget or like something like this. It would be kind of crazy. Because I don't think they've gotten into the Department of Defense. Have they gotten to the Department of Defense yet?
No, they are gonna. They've said they aren't gonna cut any Department of Defense. Yeah,
they're
right
not.
Now, but right, even the 150 million, it comes to 2,000 a person. So that's not nothing. That's good. It's just it's well short of their 2 billion they wanted to save. But heck yeah, in fact, they just if you do a little research, they just Trump and they just approved the biggest defense budget ever.
Wow.
And they're getting ready to approve the biggest tax cut ever. So yes, all this stuff together will be inflationary. or it will be, it's going to be tough times for the market. But 2,000 a person. Okay. So I was thinking it was, but anyway, so I guess the word they're saying 5,000 a person, 2,000 is good too.
Yeah, I mean, we're only
the Dems and the critics are saying, see, Elon felt kind of and stuff, because he was saying 2 billion, he only came up with 150 million. But if it comes out to 2,000 a citizen, that's not a failure. That's not nothing. I think that's a decent job, a good start.
Yeah,
and that's just the first year. Maybe Elon can get the rest of it next year or something.
How many? I'm going to say, how many days has Trump been in office?
Oh, 100 or something. 110. It's just something like that.
Oh, right now, no, it's not quite. I was just thinking about this because April 20th is going to be 90 days.
So 90.
Yeah.
So right at 90 or so.
Yeah.
So 90 days of being in office, and in my opinion, I'm not a right or left kind of guy. To me, I think I've seen more from him in 90 days than I've seen Obama. I was like Bush, Clinton. I've got the name. Joe Biden.
God. We have to remember inflation only started counting when he came into office. So egg prices and all of that,
It's very interesting. Like when I watch the news about that, the news will be like, "Oh man, prices are skyrocketing since it's all Trump's fault." I'm like, listen, Biden under his time, gas prices were extremely high.
For the 2022, 3 out of the 4 years, we had like massive inflation for those 3 years. They're starting to fall. So the gas prices, because there's more oil drilling and stuff, the gas prices are starting to come down nationwide. They're trending down.
And eggs are starting to come down. There's some stuff that's starting to go the other way. We just need the stock market to quit coming down.
I know.
That's the bad thing. But at least eggs and gas are coming down at the same time.
Mm-hmm.
Yeah, those are big things. I mean, if electricity starts going down, I don't think rent's going to start going down.
Rents are insane.
Probably not. Probably not. But yeah.
Let me see. Maybe there's the actual chart. So I know AAA gets. I mean, if you guys are in Vegas here, guys, we're seeing some high prices. What about you guys? Any high? No, you guys are white.
Here in Florida, for some reason, so this is a good topic too. Gas prices don't always make sense to me because I watched crude oil. Crude oil came down to like $60 a barrel. And then for like 2 weeks, gas prices went up to where they were like almost like $3.20 at some stations. But I'm a Costco member, so I always get it cheaper. It's been below $3. Now it's back down to like $2.83. And a lot of the stations that were like $3.20 are down to like $2.95 or so. So it is like go to Hillsborough County here in the middle of the state.
Okay, Hillsbury.
It's saying 306. I would say it's even lower than that now.
Wow.
And that's a good sign because we're getting into the hotter months now. So that's a good sign that it's actually coming down because normally by now it's going up. So that's a good sign.
How's your gas in Texas?
We have the cheapest gas in the nation.
Yeah.
Wow.
I mean,
we do San
refineries.
Antonio. I mean, Valero is in San Antonio. I think San Antonio literally usually has the cheapest gas in the nation. I'm 1 hour away from San Antonio, but ours isn't maybe as cheap as down there, but theirs is literally as cheap as it gets. And I think it's pretty cheap in Houston as well.
Mm-hmm.
Holy crap, $2.40?
When I was in Houston in December, I couldn't believe it was like $2.25 or so.
Yep.
Yeah.
Right there with the refineries. Right there.
Damn. I mean, even they're high. I can see it's like this is kind of in the corner a little bit, but $2.60? Dang.
California is always the highest because they add like $1 in tax to the price per gallon.
What's the high? Oh my God, almost $5.10.
Mm-hmm. There's like $1 in extra like tax and fees and stuff.
Dang. Almost $6 right here. Holy crap.
Yeah, crazy.
And to me, when you really think about like how are people surviving? Like you're spending $5.90 on gas, probably electricity bill and food prices are pretty up there. Like I wish there was like a AAA gas prices, but just for like an egg prices to see like where
I was actually looking like the same way I look up gas price. I was looking up egg prices on Google.
Maybe they have like a egg price tracker.
They should. No, I looked because I honestly I was fact checking Trump because he said they've dropped 90%, and I didn't see that. They have dropped, but not 90%.
Yeah, a little bit.
Yeah.
But some of like one thing is still expensive for me is beef. I bought some Korean ribs, Korean barbecue ribs to barbecue, and I'm spending like $3 more. I've been trying to avoid buying these because they're so expensive in general. But what the? Wait. We're on Trading Economics. This is not a bad. This is one of my favorite websites. So let's see.
That's like the commodity price, like for eggs. $3.13 a dozen.
I wish they could go per state. That would actually be better.
Like I remember for some reason, right when COVID happened, like egg prices were really cheap. I remember getting that, like Walmart had a dozen for like $1.
This is per month. We're gonna have to wait. Maybe I don't know when this last was done, but we actually have a big comment here from Michael Anthony. Michael Anthony said, "Isn't the PFE oversold?" Which is CNBC announces tariffs on drug companies, which all drug stocks sold off with PFE beat of 0.63 was 0.16 with CEO outlook. I mean, this is actually. What do you mean by this stuff? Actually, what's up, guys? How you guys doing? Does anyone want to break this down right here?
Let's see. I'll try to take it. PFE oversold. CNBC tariffs on drug companies. All drug stocks sold off. Yeah, he's saying basically the market's oversold. Of course, it's gonna bounce back. It's just a question of when.
I mean, if we look at where is TradingView? Give me a second. I'm not a fan of buying at these high prices, but TradingView. Let's check out TradingView. And
there's a lot of stocks right now. I would say like Nvidia and others that are significantly cheap right now, relatively speaking.
Pfizer that he's asking about. I guess.
Oh, that's right.
At PFE, just. I don't know about big pharma with Kennedy in. I mean, I don't know. We'll see. I mean, we'll see. I hope they don't make too much off vaccines because, you know.
I know exactly where to go with that. I mean, oh, wow. So this is October of last year, and now we're sitting down man, this is punishing.
It's probably like the top one or the top 2 or 3 drug companies in the world. I used to know a lot about big pharma because I used to have a lot of stock in Eli Lilly, and Eli Lilly's always been top 5. Eli Lilly's actually like probably number 1 nowadays, but Lilly, Merck, and Pfizer are kind of like, those are kind of the 3 big blue chip when you want big pharmaceutical companies. I mean, everyone's always going to get sick, and those are the best companies as far as research medicine and stuff goes. But seriously, I don't know that big pharma is going to do great with Kennedy. And I mean, I don't think it would do as great as it would under a Democratic administration because they're generally more friendly to healthcare type stuff, right? So, but that chart is way oversold. I mean, I haven't looked at Pfizer in a long time. I mean,
it might do a big bounce back like Facebook did. Facebook had a massive bounce back.
You know, the one you should look at,
like
if you want to see a massive profit from like the vaccines, look at Moderna.
Moderna,
yeah, huge run up, and it's crashed since then, of course. MODERNA. Yeah.
mRNA, right?
Ironically, the ticker symbol is mRNA.
Yeah.
Yeah. See it?
Oh, we actually get some more comments. Whoa. What? That's insane. Nearly $500, and it just. Wow. I would hate to be buying up here. Oh my gosh. We got some actually comments from Anthony. Anthony got some good comments in there, man. So PFE shouldn't sold off since American company since 1849, which is the PE is now 15. It's a PE ratio of 15. That's really good. It's under 20.
Yeah. Any low PE ratio is like that. That is really low. You're right.
Actually, you know what? Before we look at Moderna, let's look at PFE again, if you don't mind. Let me see.
Also, even if it's, who cares if it's American or not, because I believe that pharmaceutical companies were exempted from the tariffs. I think that was one of the first things that Trump exempted was pharmaceutical companies. And then he exempted Apple too.
That kind of raises that raises my conspiracy antenna when stuff
Yeah.
like that happens. Yeah.
Oh wow.
I may be wrong. Do your own research. But I could swear I heard he exempted big pharma, and for good reason. We don't want to make, life-saving drugs too expensive because of we aren't worried about tariffs on when it comes to life-saving drugs. We want to protect industries like automobiles and steel, but on life-saving drugs, it doesn't make sense to get in a battle with another country, a tariff battle. You know what I'm saying? Because they're already expensive enough. So thank God he exempted those, because we don't, that's anyway. But yeah, I agree with what he's saying. It's a good American company, been around since the 1850s, just like Eli Lilly. Eli Lilly was founded before the Civil War, and it was founded in Indianapolis. Pfizer's out of New York. Yeah, those are. And there's another one called Merck. MRK is the symbol, and it's as good as it's blue chip as you get if you want that kind of company.
Well, yeah, I mean, even looking at it, like Anthony brings up some good points. It may be, on a death dive or going down, but they're still paying out high dividends, and their earning reports all are good. Like they're beating earnings each time. So it may be oversold, but it may do a reverse. Interesting.
Yep.
Let's look at what was it? The last one, Moderna.
Yeah, we had it up, I thought.
Now this one does do a lot of vaccine stuff, and so I really don't think this one's going to do well under a Trump administration, and no one else thinks it's going to do well either. Because look at the chart; it's been selling off.
Go back to 2020 though.
But
so
it could bounce. It could bounce.
So okay, right there, and then look at from 2020 to 2021 when the vaccines were rolled out. Look at, and you need to zoom out. Yeah, there you go. See that? Look at that massive. You see that?
Yep.
Yeah.
Now, not to be too conspiratorial, just if you guys have time, there's a Instagram channel that shows off when politicians buy stocks. I would say it's very interesting that a lot of politicians have interest in this company before the COVID stuff came out.
Moderna and Zoom were two of the biggest ones.
It's not just politicians. There was also hedge funders and other elites that were doing it as well. But yeah, the politicians did. Speaking of that, Google had bad news that came out today. What was it? It was like
yeah. There's like an antitrust case. They want to consider them a monopoly.
Something really exactly, and they got found guilty on it or something. It was a bad turn of events. Anyway, well, I have a new service that I love called Trade Vision. And I'm on a free trial but I'm going to keep it. It's awesome. Anyway, it has dark pool option trades, so you can go in the dark pool and you can filter. So I was looking, and yesterday, right towards the close, people were selling Google calls and buying Google puts like crazy. So I'm not saying it was politicians, but obviously somebody knew. I'm going to start making content on my channel about it, but about that kind of stuff. But yes, you can see in the option volume lots of times, and sometimes you can't, but lots of times you can see in the like they say before 9/11, inexplicably there was 6,000 calls bought in United Airlines or something, or puts. I don't know, but it is some kind of
inexplicably.
Yeah, probably.
Yeah.
And
I know some trades are just like, how did you get that perfect entry? Like, we all have to speculate on that, but let's see.
I've heard there were people that stayed, not to go on a tangent here, but there were people that stayed in the World Trade Center because they knew every minute that the market was still trading that day, they were making so much massive gains, and basically they knew they were going to perish in the building, but they were making their family wealthy, because they knew okay, every minute, trade.
Illegally built
Yeah.
Give me 1 second, guys. Here's a double back on that right there. It's from some news station, guys. So let's check it.
Google has illegally built a monopoly over online advertising, according to a federal judge. This ruling could reshape the multi-trillion-dollar company and its power over the internet. The judge found that Google locks publishers into using a certain system that matches websites with advertisers. Google has argued its tech helps publishers and small businesses.
I don't know. You guys think that Google's a monopoly, or just it's really good at what they do?
I mean, I would almost say in their industry, they have some monopolistic power.
Well, we got a comment from here. Is Andre playing a fake news reel or fake news or real news source? I just typed it into Google, obviously, just because I'm unaware about this, so I don't have much to speak on. So when you Google if it did lose it or if it did win, I have no idea. Actually, and we have a guy trying to get in. Let me see.
Oh.
Yeah, if you guys want to join the discussion, it's cool. The link is right here. You don't have to show your face. I do not mind. You can join and we can talk. So here you go. Michael, if you want to join, or actually the person who jumped on, or actually, was that Max?
Yeah, no, Max, we lost Max.
Oh, that's what it was. My bad. I think it's having some connection issues, but we'll let go. We'll see. We'll proceed on. But basically, guys, this seems pretty crazy. It's antitrust day for Groundhog Day for Google.
Hey, was that site we were talking about? Was it called Trading Economics?
Yeah, Trading Economics.
So I was looking at the egg prices. They have come way down since like March 12th or March. Yeah.
In my store, they've come. I don't look at the website, but I mean, in my store, they've come down. So they're still kind of high in my store, but it's way better. It's a big improvement.
Yep.
I know because when I was looking up at the chicken price, I know that they had they killed off a bunch of chickens because of that chicken flu that was going around earlier last year.
Mm-hmm.
We got another comment from the fun guy. I have so much crap in my brokerage that I forgot I even purchased it. But fun guy, if you want to jump on, it's cool, man. If you guys want to make Miranda a gamer again, let's jump on. You can also get on and we can talk. You don't need to show your face. You can just talk and say what your spiel is. It's all fun over here. We're not going to attack you unless you want to get into some dividends. Or
dividends all in on YieldMax.
YieldMax. Let me see. How has YieldMax been doing so far in this crazy market?
Horrible. We're getting the beta test though, because remember we talked about YieldMax hasn't really been through a serious correction, and we're seeing it now.
Which is a good ticker for YieldMax to look at?
You could start it with Tesla. How about that one?
Or you can look at just YMAX, because that's one of every one of it. That's the whole company.
Yeah.
So
I mean, you know, but it's a fund of funds. It has everything, but
Ooh.
I mean, I hope the dividend payout's been pretty good.
Oh, of
course. It fluctuates. It's weekly.
Oh, weekly. Wow, that's crazy. Weekly payout. So
there's like 8 of them that pay weekly. You know that a lot of the high yield dividend ETFs are going to this weekly trend now. Started by Roundhill, and then now almost all of them are copying it now.
Wait, I just found 15 shares of PFE in my account with a cost basis of $38. $38? Yeah. Wasn't it?
Type in Tesla.
What is, how you spell Tesla?
TSLY.
TSLY. Okay. Oh my God! It just keeps on getting slapped. Oh my God! You know what? We got something for this. Here.
And it's gone.
Not yet. I mean, I'm still holding the bag on some of it.
What the hell is that?
You know what does suck though? Like, so this was tax week or tax day a couple days ago, obviously. So, luckily, I mean, the whole return of capital thing gives you a little bit of a tax break, but it sucks when you think about like, okay, you're investing in this, you're kind of getting your money like paid back to you and owing tax on it, and you see something like this, you know.
Well,
but I know, I mean, a lot of the audience loves it, so you know, can't complain.
Last year low was like 135 on Tesla. Holy crap.
So check this out. I just pulled up from the first quarter of this year, Tesla versus Tesla. So January 2nd, 2025 to today. So not really the first quarter, year to date. And anyway, Tesla's down less than Tesla. Tesla's down 36.36. Tesla's down 27. So, and that's the way the high yield funds work. They lose less than their underlying, which of the index funds has actually performed the best in the first quarter is Triple QY by Defiance. People hate that one, but it makes a huge buffer. It makes that huge it makes a huge yield, and that's why people hate it, because on the way up it goes up so slowly because of the huge yield. But like it spanked any of the ones that people like, the JP Morgans, the Round Hills, any of them, it spanked in the first quarter. So anyway, but it's because, like you say, this was our first test for a down market. I've been saying ever since I got in this, the Defiance ones were actually the safest mathematically because they had the biggest buffer. They're the most dangerous on the way up, most likely to underperform on the way up, but the most likely to overperform on the way bottom anyway, on the way down. And it's proved me out. So year to date, Triple QY is down 11.7%. Where QDTE from Round Hill, everyone's darling, and it's a great fund, I'm not knocking it, is down 14.9%. And so I mean, they have their, I mean, I have my model portfolio is doing pretty well. Because I mixed in some Y triple Q. You don't have to be long all the time. Whenever it started to crash, I mixed in 25% of some inverses and wrote
That's
it
the
down.
inverse,
But anyway,
NASDAQ 100. Yeah.
And then but then when we got lower, I took some off because I don't want to get, I had like 30% almost at one point. And then I figured we bounced and I took some off kind of close to the lows, and we have bounced. If we get back up to the 200-day moving average, which is still pretty far up, and then falter, I may go back up to 25 or 30%. I mean, if I still think we're going to have, the market's going to be in a problem. But I've saved myself that those we were down 10% in 2 days. The market was, I was down like 2% one of those days and 3% the next day. So I lost 5% in a period of time when the market lost 10%, which is what I'm trying to do. I hate to lose money. I'm trying to hedge myself at all times.
Lose less than the market.
Always. And that's what options do. That's why all these funds I talk about, they generally lose less than the market on the way down. Tesla, even as bad as it was, lost less than Tesla. People hate Moderna, MRNY. We were just talking about that. That one's just got spanked. Let's see if I bet even it's done better than its parent. But I don't know. I'm pulling it up. First quarter year to date, MRNY down 35%, mRNA down 41%, and you don't get a dividend. I mean, that's what people, I don't understand what's so bad. I mean, because mRNA, sure, it's a growth stock, but it didn't grow. In fact, you lost more. And
that's actually a good point. That's a very good point. Yeah. It's down less, and you're getting a dividend.
Yeah, that's the way these work, and a lot of people don't understand that. But anyway, that's why I like these so much. But here's the catch: so all of them are going to be down less generally than the parent. The catch is, though, because of that, they're going to be up less also. And what does the market do more times than not? It creeps up like 2/3 of the time. So that's why covered call strategies underperform. So therefore, that's why you shouldn't do it when you have a job. You're 30, you're 40, you're 50, you're in your prime earning years, you have a job. But as you get older and you get to my age, you can take some of your growth assets that you've had in VU and VTI and Tesla and, real assets, and you can take some of that and then buy some of these, and it makes perfect sense. But it doesn't make a lot of sense for a young guy, and I think that's the problem with these. You get young guys that are all in on these, and it seems great, but you're costing yourself a lot of future growth. And if you have a job, in my opinion, you're better off just to work your job, keep everything in growth, and then as you get older, switch it over a little bit. Because you don't want to cost you, because that the thing is, yes, they're better on the downside, but they're worse on the upside. So that's uncomfortable.
Somebody just, because look at this, Michael Anthony. I'm setting up just to buy some common share. I don't short, never. Like, I bought PFE on the way down, bought 2,000 shares each time, and with a great dividend on PFE.
Yeah. The dividend, those Pfizer, the way those stocks pay dividends is the board announces the dividend. Like last year, it's a set amount. They announce it. So whenever the stock price of the company goes down, it makes the yield of the dividend go up. So Pfizer might have used to pay maybe a 4% dividend or something, which is all right. But, you know, if the stock price got cut in half, all of a sudden it's paying an 8%. And if you buy it down here, you get the 8% yield. I mean, because it's kind of a variable yield. It works different than the high yield funds where they change the payment every month.
I call that the dividend paradox,
Exactly.
like, because it's a percentage. While the stock price drops, the dividend percentage is like, it's almost like we get a raise, and then you have some YouTuber, they're like, wow, Pfizer dividend doubled, you know, because the stock price got cut in half.
Exactly. Yeah.
I mean, this is not a bad.
My thing though, like I gotta look what you're saying, Max, because like you're actually making a really good point there that it's down less. When I follow them, like on the upside, and not bashing them, just kind of playing devil's advocate here, but like Tesla ran up over $400, like a commenter pointed out, and we did see Tesla come back. It was positive last year, but it didn't participate in a lot of the run up.
Yeah. And it's going to leave, that's just the way covered calls work. It's going to leave about half the upside on the table. But as you see, the payoff is if it goes down, you're going to do a little better. Now, here's the other thing. What a covered call writer really wants is a stock that goes straight sideways. Because but that hardly ever happens. Most stocks go straight up or straight down. I mean, you know, but they don't cooperate. So that's the bad thing. When you get in a yield max stock, it sucks because if you choose one that does super good, you're almost mad that you didn't just get the underlying. I mean, but so the solution to that is, and a lot of people do this, you know, that these things pay a huge yield. I mean, so you could get MSTY and it pays like triple digit yield. Well, just take half of or just take the yield and buy shares of MSTR with half of the yield, and then go spend the other half of the yield. And then anyway, you're using, I mean, then what that'll do for you is you're recycling it, and you have some true unlimited upside. If you're really bullish on something, you should own, I think you could own both of them. But anyway, but still though, for young guys, it's like you say, Coach, you leave a lot on the table. Yes. Tesla doubled or Tesla doubled and Tesla made like 15% or 20%. Yes. You left like 80% on the table.
So I've seen like a classic example of your point, Max, is like NVIDIA versus NVDL. So NVDL was up tremendously. It was like 120% gain.
Sure.
But NVIDIA stock was up like 300%.
So isn't NVDL leveraged? How does...
Oh, no, I'm sorry. Wrong one. What's the yield max one? NVDY.
Oh, NVDY.
I'm sorry.
Yeah.
Wrong.
NVDY.
Scratch that. Yeah. NVDL is like, should be up higher than NVIDIA. That because it is leveraged. Yeah. I'm talking about NVDY, the yield max one versus NVIDIA.
But think about that. I mean, the way I see that, that's pretty good. I mean, because you still got some upside.
Oh, it's a tremendous, it's a tremendous return, no question.
Yeah, but it's not for young guys, and I think a lot of people are using them wrong, or I don't know, or just, you know, they're I mean,
I feel like if you don't reinvest the dividend, you're going to have such NAV erosion that it's just, you're getting that dividend, but like your NAV is going to be so much lower over time.
So, or you could reinvest half the dividend, but and that way you have some because the dividends, the payouts are ridiculous. They're absurd. Even if you reinvested 2/3 of the dividends on some of these stocks, you have, you know, I mean, so anyway, it's kind of a good problem to have. But yes, the other side to that is the erosion.
Well, what I did, you know, and I get what you're saying, like for younger people, it's probably not the most optimal thing, but I went ahead and I just put, when I got my new job, I just basically put play money into it. I said, let me just basically, for shits and giggles, let me get a $60,000 dividend portfolio, which I achieved last year on YieldMax and other stuff. And I was like, you know what? If the job goes away, that's there to fall back on. What really freaked me out is that because I trade with Schwab, and the income projection, they completely scrapped like most of the YieldMax funds because they said their payouts are too unreliable. So my projection went from saying like 65,000 to last year to like now 21,000, which is way understated because it's still going to be like 3,000 a month, but it is lower than what it was last year.
Well, they don't know. Schwab doesn't know how to account for, because you're gonna get a huge yield, but you're also gonna get some depletion, and it's gonna, and so Schwab doesn't want you to. They probably make conservative estimates on that estimator. Yeah, but hopefully you do a little better than that. Really, all depends on how the underlines do, because you're also playing the underline. Is what a lot of people don't realize. Yes, it's a yielding, it's a yielding asset. But if the market drops, that's what happened to Tesla. Nothing was wrong with Tesla. It was the wrong underlying. Tesla dropped. I mean, I'm not saying there's nothing wrong with it. It did exactly what it was designed to do, is what I'm saying.
It's funny what got me hooked on it in 2023. I looked, like you're saying, and I saw there was 2 months that it mirrored Tesla, and I was like, wow, if we could get it to mirror Tesla and pay this amount. I got really excited over basically 2 months of sample data.
Well, it's like free money. Everyone did. And I can see why, because if it would work, let me tell you, here's a good use case, I think, for a young guy, for somebody you or Andre's age. Maybe, people say you can only do 7,500 in a Roth. Well, yeah, it's only 7,500. But if a young guy just maxed out the 7,500 and put those in high yields, because then it would grow tax-free. Because they aren't tax efficient either. That's the other thing. I mean, if you're in your 40s and you're in your prime tax years and you're knocking down 200,000 at your job or something because you're doing well, you're going to be in the top tax bracket. Yeah. So that's why else you don't want these. These are for retired whenever you retire and you're on less income. But anyway, I think they're a tool and they have a good space. But for a young guy, you could just put 7,500 every year. Put it on drip, reinvest everything, because you can't spend it anyway. It's until you're 59 and a half, and just build you. It doesn't have to be all high yield. You could also put some Cornerstone and some master limited partnerships, but put yielding investments in there, turn them on drip, and let it turn into a dividend snowball. And if the market starts going down, you put in some YQQs. You do like I did. You mix in some inverse funds, and make that your little retirement and let that grow till you're 59 and a half. 7,500 isn't much. But if you started when you're 30 and 7,500 a year, what does that say? It's maybe 200,000, and that's if it doesn't grow at all. And it'll grow because you're going to be dripping the dividends and stuff. So then when you retire, hopefully that'll be, you can start spending the money.
So interesting little anecdote about taxes here, because I just, like almost what you were saying, I just had this happen. So of the 64,000 or so in dividends, a portion of them was in the Roth. So it was like 44,000 in the brokerage, and because of return of capital, only like 14,000 of it was actually taxable. So that turned out to be really good.
Well, that was okay. So here's the other thing: if it's in the Roth, it doesn't matter. But yes. Because it's return of capital, even if you do pay taxes on them, the taxes, aren't that bad. So anyway, no, they're a tool and stuff. I just think they're used too much by young people, because what it does, here's what it really does. It leverages you to the market a little bit, because yes, you're getting a yield out of the stock by doing these option strategies, but you're also dependent on the stock to go up, or at least not to go down. So you're kind of asking the stock to do two things for you. So it's all fine and dandy in a market that creeps up slowly, goes up fast, or even goes sideways. But if you get a market that goes down, it's a kind of a double whammy, because you're taking yield and then you're also experiencing massive NAV depletion, and it's demoralizing. And so anyway, but that's why it's not for young guys, and why I think you should only use, like, I say as little as you can, 5, 10, 20%. So Coach, your portfolio that you have of, I bet that's somewhat small as compared to the rest of your assets.
Absolutely. And I say that all the time. I say to people that say I'm a yield max shill or whatever, I say, this was basically play money that I put into it. I didn't put a lot into it.
We got a question from Michael Anthony. Question: since PFB is considered a U.S. company, will tariffs be on American companies? I thought we discussed this earlier. I thought the tariffs weren't on medical companies.
I heard big pharma was exempt. What I would do is I would go ask ChatGTP or something, because I do that anytime I hear anything on the internet. But I'm pretty sure I heard that medicines are exempt from the tariffs. So I think Pfizer should be in the clear, because that's what they do, is they make medicines. But you're going to want to check that. I use a lot of Grok, which is like ChatGTP, but I think it's even better, and it's not woke.
Can we put a tariff on woke products? Let's look that up real quick. Woke products. Oh, you know what a good woke product is like purple hair. Like purple hair and nose rings. List of the most woke companies. I mean,
purple hair dye
talked
comes
about
from China.
the
it already does, he's saying.
Purple hair dye comes from China, and it's 145. Oh my gosh, it's insane. Let me see. So,
Ben and Jerry's,
Elf Cosmetics, beauty supplies, Mars, Campbell Soup. Why would Campbell Soup have to be woke? PepsiCo. There's no.
Hey,
I understand, but
who's interested in Pfizer? I forgot his name. What's his name?
Michael Anthony's, and he was talking about the medical companies.
Well, I just Googled it, Michael. I said, I just Googled it, and there's like 4 news stories that came up from today about Trump and tariffs having to do with generic medicine. So generic medicines, evidently from Europe, may be harder to get, supposedly. But anyway, name brand medicines like Pfizer makes should be exempt. But anyway, there's tons of research on the internet. Just go Google it. I'm reading it right now, and it tells you all about it. Yeah.
And it's also had a comment about a KHC. This one I've been looking at. I mean, for Kraft Heinz, I mean, it is making kind of good bottom. Their dividends at 5.5%. I mean, it's kind of like this death dive a little bit from the hundreds. And I mean, it's not. If you're going to DCA in here, this is not a bad price.
Dude, that's a blue chip. That's a widow orphan stock. That's a stock you can buy and forget that. I mean, that's like Clorox. I mean, those stocks are, but they go up and down, but they're never going to go out of business. I mean, everyone's always going to want ketchup, mayonnaise, and mustard. And it doesn't cost that much to produce either, I don't believe.
How are the earnings doing? Let me see, earnings reports. Okay, they beat earnings. We'll see.
Last 4 quarters, yeah.
Interesting.
And the threshold's lower for this one.
Yeah, I mean, if it does go down lower, I mean, the low on this is like what? Not even 6% or 10%, so kind of 11%. So if I was going to dollar cost average, getting a 5.5% dividend, I mean, if you're planning a couple of years in advance, like up to these highs, it doesn't seem like a bad move long term. Very interesting. I don't know. How do you think YieldMax is going to do in a couple of years?
We'll see.
I think they'll do fine. I think it's been doing great. Been one of the most successful product launches I mean, they brought billions of dollars. I'm just talking as far as the product goes. I mean, as far as assets under management, it's one of the most popular. Now it's probably a fad. Well, it's someday that the fad's going to wear off. I mean, there's too many covered call funds, but I don't think YieldMax is going anywhere. I think they've done a good job. I think they've done exactly what they're designed to do. But I don't know.
Yeah, another big comment from Michael Anthony. CNBC announced that Trump tariff, then all drug companies sold off. And look at BMI. Let's look at that BMI.
That's Bristol Myers Squibb. BMI is Bristol Myers.
I've been checking. You guys are looking at a whole bunch of charts I've never seen. Or
American
I've never looked
stocks,
at.
right? Yeah.
They all pay pretty good dividends. Those drug companies are blue chip stocks. People love to.
Whoa. It's a scary bar right here.
Another blue chip. Coca-Cola, Verizon.
Those all pay solid dividends. AT&T used to pay like 7.
AT&T, yeah.
Even oil companies like Exxon and Chevron were paying like 4 to 5%.
Well, a lot of them,
wow.
yeah, they have pipeline deals. They build pipelines and finance them with dividends or something. There's somehow limited
MLP. It's like MLP. Yeah.
Yeah, exactly. And those can make 7, 8, 10, 12%. I mean, hell yeah, those are good. Can be anyway.
You see, where's the PE ratio on this right here? Give me a second. PE ratio.
It should be under.
He's right.
There. Yeah.
He said that BMY has no PE ratio and made a big loss year. That's interesting right there. Interesting. Actually, we have another comment from down here. Misty feels like it will either be one of the best investments in the market or BTC will fall and MSTR will implode, causing Misty to die. Let's see Bitcoin BTC.
Well, they have an inverse. They have an inverse, Misty, that pays a yield. It's called Winter, WNTR.
Yeah, that's one of the newer ones.
It just came out, but if I had Misty, especially if I was trying to YOLO and trying to make a ton of money on it, if I had a lot of money in Misty, like say $200,000 or something, $250,000, I would also have like $50,000 of that inverse. And then, and especially whenever the market was bad, like it is now, because you can still keep getting, you can get paid on both sides. Having an inverse, and I know Andre doesn't trade options, but Coach does. But having an inverse, owning those two ETFs at the same time is just like doing an iron condor. You're just doing it with ETFs. You make money on both sides.
Yeah.
So anyway, it can be a good strategy, but that's what I would do. Is I would use the inverses to kind of cushion the blows, because these things lose a lot whenever the market goes down. It's like I say, it's not really bad, but it's kind of because they're giving you all this money. And then if the market goes down, it has to come from somewhere. You know, the money comes out of the NAV. It's NAV depletion. So, but anyway, but I'm just big into the inverses. You don't need a lot, 15 or 20% even, and it'll cushion the downside. But yeah, I agree. I think Misty's going to $1 million or zero. I mean, there's no two ways about it. It's all or nothing with that one.
It's pretty. Those are two pretty wide extremes there.
Or I didn't mean Misty. MSTR is going to $1 million or zero. That Michael Saylor is either a genius or a madman, and there's no in between, right? But I think he's a genius. I love the dude personally.
I hope it recovers, because I got some options on some of those levered ETFs, and I got assigned like MSTU.
Yeah. What do you do? Sell
Albertsons.
Yeah. I was making really great premium on them.
Yeah, until the market started going down, right? I mean, or you start making premium, but then you start losing on the other part of the investment. But covered calls are so tough because there's two parts of the investment. There's the covered call part, which always makes money. But then there's the other part, which way the stock moves.
Yep.
Anyway,
this is actually pretty interesting. The guy brought up, Michael, do you think you can buy ACI at $20?
So Albertsons was supposed to announce a merger with Kroger like a year ago. I did it turned out to be foolish options trade on this, thinking that would go forward, and it never did. So I haven't touched Albertsons ever since.
Ooh.
Kroger and Albertsons, or Kroger's a good blue chip company too.
Yeah.
Those are the kind of companies I would put my mom in when I used to be a stockbroker. She had a lot of utilities are great for retired people. We put them in a utility. But she had Pacific Bell. I just bought tons of utilities for her when I was
with a K. Broker. A K, not a C. Yeah.
Oh.
Yeah, no, those make sense for sure.
Oh yeah, for retired people, because they're utilities. Everyone's always going to need electricity, and they pay 6 or 7% yield, super low risk.
Hey, Max, question for you: do you estimate the dividends every week for Yield Max?
I don't. I'm out of that. No, I don't. And Retired does that. I never did it for Yield Max. I did it for Defiance every day for like 9 months, but I quit doing it, I think, around October. So no, I don't anymore.
You did like the spreadsheet. You did like the spreadsheet and all that to
Oh
like
yeah, well,
analyze.
because you have to estimate the dividend, you have to put the strike, and then I have to figure out the intrinsic and the extrinsic, and it was
Yeah.
quite a little process, but people loved it. I got so many good comments.
Oh, I know.
And
Yeah.
I got 1,000 views a day.
Mm-hmm.
You know, I got views, I got comments, but I just, you know, I just didn't really care for the spreadsheet work, and so. I'm trying to find a different niche, or the same day. I'm just trying to find some more stuff that I like. I just don't care for the estimating dividends. But
I've gotten better views too doing spreadsheet stuff.
yeah, now I still do spread. I mean, you have to all use a spreadsheet to illustrate a point, but I try not to just need the spreadsheet. Anyway, but I do like what I like to do is what I've been doing a lot of is going back and showing I get in Portfolio Visualizer, and I'll go back a year or 2 years, and I'll show how somebody would have done if they would have had Tesla and maybe the SPY, and then I show how they would have done if they would have had Tesla and the SPY. You know, I'll do all these different comparisons, and that's what I've been doing a lot of is simulations and portfolio allocation stuff lately. We've been doing a lot of that.
I mean, the SPY has been. I mean, it's not getting too bad. I mean, we sound like a potential buying point right now.
We're almost, if you go back 2 years, like we're almost at the point where it reversed and came back up. Like if you look, if you can get rid of that.
Yeah.
Oh,
it's I mean,
good. I see. Yeah. But 2 years ago, we were almost at the point of the same level down. So it looks like it's coming pretty close to where we might start to recover. Hopefully.
We just need some Fed help.
Yeah, for real. I mean, Trump was saying today other countries are cutting interest rates, but we're not.
So here's the problem. You guys were talking about that. So here's the problem. Yeah, even if Trump fires Powell, he could send Doge over there and they could lock the doors on the Federal Reserve. I mean, they could physically, I guess, you know, but I think the problem with the whole thing is, or even if Trump, let's say Trump appointed a loyalist to run it and cut rates right away, cut rates to zero right away. He could do that. In theory, the bond market would call BS on him, and possibly. I'm not trying to be but that's the problem with that. You can't trick the bond market. They tried to trick the bond market with the tariffs. I mean, but every time it goes up, the bond market just about crashed, and they changed their mind. And I have a feeling they're kind of stuck, and they need lower rates, and they need the Fed to lower rates, and they think it would help them. But I'm saying, even though somebody could artificially lower rates, it does not change the supply and demand of world money and the flow of money. And that stuff is, the bond market's big. And I'm just saying, I predict what I'm saying. Even if he's put someone else in there, it won't fix it. The bond market will still rule the day.
Yeah.
I mean, I just kind of like to think a little like, for me, I think rates should go higher. I am not a fan of low rates, especially how things are going.
Well, just because you have a bunch of gold and stuff.
Some motives here.
Come on.
I'm not biased at all. No, why would I want that?
I will say, as far as Powell, though, and I noticed that I finally heard this on Fox Business, but I said this like 2 or 3 months ago. When they cut rates, he cut rates right before the election. And then lo and behold, Trump won. And then 2 weeks later, he's like, oh, the economy doesn't need such aggressive rate cutting. But it did like 2 weeks before.
Yeah.
So he shot his credibility a little bit there, I
Oh,
thought.
yeah, for sure.
Yeah.
You know how sexy that line looks, man? Look.
Yeah, I know you like that. Yep.
All the markets are going down, and I'm not even affected at all.
I do maybe have a little bit of vested interest. I might, who knows, I might inherit some gold one day.
Sure, but I bet you have a lot more stock. You do. Most people do better, not only if you have stocks, but also your home, your job. Most people want the economy to keep going along pretty smooth because it helps out other stuff.
Well, Max, I think you and I would agree more, like, because Andre and I, we do kind of disagree on this. Like, as far as an investment, I would say gold underperforms over time as far as the returns of like the S&P and the NASDAQ. I mean, 30, 35, 40% a year. I would just have to say, I get it. Maybe it's artificially low and all that, but Max, you would agree, right? The market as an investment, it outperforms.
Well, here's what I'm going to say. And so do bonds. Bonds also lag way behind stocks. and that's especially true the past 40 years. But
Mm-hmm.
the world's been around a lot longer than 40 years. People say the 60-40 portfolios. I'm saying no. I'm saying yes. Gold has been disappointing lately, and bonds have been disappointing lately, and diversification's been disappointing lately. Lately, all you need to do is buy Nvidia, and that's all you need to do. But that's
Warren
not always
Buffett.
going to be that way. I'm telling you, someday Andre is going to be right. Sooner than later. I do think that gold will come back in. No, he's right. It's been out of fashion. Gold and bonds
Max,
have been out of
I
fashion.
got a present for you. Here you go, buddy. Thanks, man.
A lot of people in the old days, people used to do 60-40. A lot of people do, which is 60% stock, 40% bonds, and that could also be gold or some other kind of diversifier. A lot of people nowadays just do all stock because the market's done so well.
That's what I do.
I'm just saying, I promise you, people are too non-diverse, and being non-diverse is great when it's working, but when it doesn't, it's going to be bad. So
I can say that last year I was primarily gold, precious metals, and crypto.
Yeah,
and I'm like, I can see. I agree with you 100%. People are either like, I'm only on Tesla, I'm only on Bitcoin, because I wish I bought more Bitcoin, because Bitcoin was one of those like ginormous trades. You're talking about like 18K to 100,000.
Mm-hmm.
Yeah.
Holy crap! You don't need anything else. What?
But oh, you got it again. What was I gonna say now? No, as far as like, so Warren Buffett, he says diversification is BS.
Yeah, I mean, concentration. But here's the thing: it's good to be concentrated, but you don't want to be too concentrated. But yeah, you can be just like it's good to be diverse, but don't want to be too diverse. You can have 1,000 stocks, and it's too diverse. You can have 500 is too diverse, but you can have 3 and it's not diverse enough. But you can have maybe 15 and it's just about right. And anyway, I think that's kind of the magic number for some reason. A lot of ETFs use the 15 to 20, and I'm thinking of FEPI and GPTY, and a lot of them. I think that's kind of all the new rage is these small targeted portfolios. No, those are what I'm really most excited about in the YieldMax universe. I've never been that excited about the single name funds because of the risk associated with owning a single name. But GPTY is a good one. LFGY is based on DeFi. Those are the ones that I think are really good. And if you're worried about NAV erosion, they have one called Bigly, BGLY, that only
I bought some of that Biggy. I did buy some of that one. Yeah,
it's a good one. It is a good one. So I mean, I'm just saying it, and it won't, and you aren't going to have much NAV erosion at all. It should be, it should be great, and you're going to make 15%. Anyway, so I think YieldMax has been a big success. I mean, and then if you look at Misty, doesn't Misty have like $2 billion under management? And I know it's not always going to be that way, but I'm saying they have made a lot of money. They have brought a lot of money. They've been a big success money-wise, selling it. Now, whether or not it's a good investment for retail to be buying or something, that's another topic. We could, have that discussion. But they've been very successful, I think.
I'm actually looking that up now. So it's like $9 billion in total assets under management for YieldMax.
I thought they were 13 or something, but yeah, it's a lot.
This might be outdated.
But it's a lot. I'll try to find
Unless it was, I hope it wasn't 13, and then because of the market drop, it went down to like 9. That wouldn't be good.
Well, I'm just pulling. It's something. I'll find it here. Title. I just look up. When you talk about Tidal, there's Tidal, and then there's also Tidal has a parent company that manages some other stuff. I think altogether, Mike Venuto manages like 13 billion is with their other company. That's Tidal. That's YieldMax plus their other company, which has stocks like. Have you guys ever heard of THTA? Or it's by SoFi, but there's other stocks that Jay manages by other smaller companies. Anyway, I think altogether it's like 13 billion that they manage. But yes, I think YieldMax by itself is 9. I think that's right. I'm pulling it up right now.
Yeah. Oh, I see. So did you guys interview that guy, Mike Venuto, when you were in New York?
I did. And then I interviewed him in December on my channel.
Okay.
Yes, I did. Yeah, great guy.
Yeah.
Let's check out Max Convexity's channel real quick. If you don't know. Where's the interview at? In the live or the videos?
Oh, it was back. Who knows? I don't SEO my stuff that well. It's back in December. I don't remember what I called it. Anyway, it wasn't actually one of my better interviews either. For some reason, I just did not have a great day. I mean, no one said anything to me, but I just was not feeling it that day. But I made up for it because then I had an interview a couple weeks later with Jay that went great and everything. So, but yeah, those guys, there's nothing he doesn't know about the inner workings of the ETF business. That guy is,
This one right here, right?
What I don't understand. Do what? Did
this
you find it?
Right here? The one with Jay or the one before Jay?
Oh, who knows? I mean, it's with Mike Venuto.
Mike Venuto.
It was in December. It may have been in January. No, it was December. It was December 15th because it was when Dorsey Wright came out. The Dorsey Wright funds. Now we were talking about concentration. Now let's talk about Dorsey Wright. Do you guys know about that? It's made up of yield max funds, but they pick the company Dorsey Wright uses technical analysis to pick the 5 strongest funds. So that one, in my opinion, is too concentrated, but some people love it. But that fund is super, super volatile. But it'll do super great in an up market, but it's been doing poorly in a down market.
Mm-hmm.
Oh, for the audience, he's talking about this interview right here. Mike Venuto live stream. So you guys want to check it out? I'm going to post the link.
Yeah, put the link up. I mean, I really enjoyed talking to Mike, and he's a great guy. And yeah, I talked to him also in New York, but I didn't record it. But I wanted him to. I tried to remember all the stuff we talked about, and I wanted him to say it again in this interview. But anyway, it just went better in New York than it did in the interview. I just, anyway, that's how it is. Things are always, things that just happen organically are always better than something you try to script out and get someone to say or do for you. But anyway, he's a great guy and a good sport. I'm glad he came on the station.
Oh, that's awesome, man.
Yeah.
I need to get a fund manager on.
I'm going to have to drop off soon.
Yeah, same for me, guys. I mean, our time, we've been on here for over an hour and 16 minutes. It's been a lot of fun, guys.
Mm-hmm.
And for you guys, please check out, first we got, we'll look at Max's channel. Max's channel is absolutely amazing, so check it out. He's the individual with the no face right here at the bottom left. This is his channel, Max Convexities, and we're going to check out THB's channel real quick before he exits. THB. Oops, Max THB. Here we go. Boom, top.
Well, there it is.
And you go live pretty much daily, right? Or all the time?
Mm-hmm. Yeah.
Yeah, I
do. So yeah, they both go live. So check out their channels, guys. Check out their links. I'll post them in the first pinned comment, so you guys can check out their Discord, their links, so you guys can get with them. And yeah, guys, thanks for this week's Smart Money. I hope you guys like the topics. If you did not like the topics, if you did not like anything, drop it in the comment section so we can improve. We're all about getting better here on YouTube to give you guys the best content out there. Thank you so much, and
goodbye, everyone. I'll remember you all in therapy.
We'll see you guys.
All right. Take care. It was good.
Peace.